Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NCR ATLEOS CORP annual report. NCR ATLEOS Corporation offers a diverse range of businesses and services to various clients across the globe. The company's key offerings include self-directed banking solutions for financial institutions' ATM hardware and software, as well as installation, maintenance, and managed services ATM as a service for back office, cash management, software management, an ATM deployment network of ATMs and multifunctioning kiosks for financial institutions and retailers, all-point network for cash withdrawal and deposit access to various consumer financial services, providers ATM branding solutions for financial institutions managed network, and infrastructure services for enterprise clients across various industries professional. Field and remote services for modern network technologies, LibertyX solution for buying and selling Bitcoin. The significant increase in NCR ATLEOS Corp stock price over the past year can be attributed to several key events and financial reports. A strong Q2 2025 earnings report, exceeding profit and earnings expectations, drove the stock up by 17% at the time. The company's reaffirmation of full-year guidance and $200 million share repurchase authorization further boosted investor confidence. Analyst price target increases and outperform ratings from Wedbush and D.A. Davidson also contributed to the upward trend. Strategic partnerships with FCTI, Inc., Lloyds Banking Group, and Income Payments demonstrated NCR ATLEOS' commitment to innovation and growth. The company's participation in an investor conference in November 2024, highlighting its strategic initiatives and financial performance expectations, likely contributed to positive investor sentiment. These events collectively created a strong narrative of growth and innovation, driving the stock price up by over 23.86% in the past year. The primary drivers of revenue growth or decline at ATLEOS can be summarized into several key areas. Firstly, sales of products with warranties and research and development costs have a significant impact on the company's revenue growth. Additionally, advertising expenses also play a crucial role in driving revenue. However, certain segments within the company are experiencing varying levels of performance. The self-service banking segment is showing strong growth, while the network segment is struggling to keep pace. On the other hand, the T&T Technology and Telecommunications segment is performing well, driven by the acquisition of Moon Inc., DBA LibertyX. Furthermore, revenue growth rates are estimated to be between 15%-20%, with EBITDA margins ranging from 25%-30%. The discount rate used in estimating revenue growth reflects the inherent risk in cash flow streams. Overall, these factors contribute to ATLEOS' revenue growth or decline, highlighting the importance of monitoring and adapting to changing market conditions. Net income and profit margins. A shift in fortune, the company's net income underwent a significant transformation between 2022-2023 and 2023-2024. In 2022-2023, the net income decreased by $249 million, resulting in a loss of $150 million. However, this trend reversed in 2023-2024, with an increase of $230 million, bringing the net income to $80 million. The profit margins also experienced a notable improvement between 2022 and 2024. In 2023, the company's net loss resulted in a negative profit margin of -3.58%. Conversely, in 2024, the net income margin improved significantly to 1.86%. The primary reason for these changes was the exclusion of Russia operations in 2022-2023, which negatively impacted the company's net income. Additionally, misstatements in previously issued financial statements and corrections of subscription, software-related revenue also affected the net income. Overall, the company's fortunes have shifted from a significant loss to a modest profit, with an improvement in profit margins. The company is indeed generating positive operating cash flow. This can be confirmed through multiple pages of the financial summary, where it is consistently stated that the company has a net cash provided by operating activities ranging from $274 million to $355 million in the years 2022-2024. Additionally, settlement processing assets exceed liabilities, further indicating positive operating cash flow. The company's debt level and interest expenses have significantly increased. A review of the financial summary reveals a substantial increase in the company's debt level and interest expenses. The data shows that the debt level has risen from $2,994 million to an unknown amount, with an additional $350 million available under a senior secured revolving credit facility. Furthermore, interest expenses have increased by 900% from $31 million in 2022 to $309 million in 2024. The significant increase in interest expenses is also evident when comparing the years 2023 and 2024, where it rose by 153%. The loss on extinguishment of debt has also seen a notable increase from $0 in 2023 to $24 million in 2024. These changes indicate that the company's financial situation has become more burdensome due to its increased debt level and interest expenses. The performance of various segments and regions within the company has been mixed. The self-service banking segment performed well, with an increase in annualized recurring revenue from $1,407 million to $1,684 million between 2022 and 2024. The network segment also showed strong performance, with a fair value greater than carrying value by more than 20%. However, the T&T segment and other products and services performed poorly, with a -1% and -3% increase respectively. Additionally, the Russia region was excluded from segment revenue and adjusted EBITDA due to cessation of operations and liquidation of subsidiary, resulting in poor performance. The Americas, excluding US and Europe, Middle East and Africa regions, did not have specific performance information provided. The Asia-Pacific region also lacked specific performance data. The company's management is optimistic about its outlook and strategy. They are focused on long-term growth, with a cautious approach to risk management and a proactive approach to debt management. The company recognizes revenue when performance obligations are satisfied and makes quarterly adjustments to account for potential exposure due to slow-moving or obsolete inventory. Management prioritizes investments in areas with high potential for returns and has historically employed a total return investment approach to maximize long-term returns. They also take steps to manage various types of risk, including interest rate risk, credit risk, and foreign currency transaction exposure. Overall, the company's strategy is centered around achieving long-term growth while maintaining a stable financial position. The company has a history of paying dividends to its shareholders. However, there is no record of the company buying back shares, although share buyback policies have been restricted on multiple occasions. This suggests that while the company may not be actively purchasing shares, it does prioritize dividend payments to its investors. That concludes the financial summary for NCR ATLEOS CORP. Feel free to comment below, and I will be happy to answer them when possible.